Alright guys, today what we're going to look at is the S&P breakout above record highs on the day after NVIDIA. This was the break through 5066, was a previous double top. So this is how to trade a breakout using data. This was the key bit to the trade. Something that we actually took on during the 6-week course. So this is the actual trade that we did during the course on that piece of data. So let's get straight into it, go and look at what exactly happened. The goal here was to get long before 5066 for the short-term break until the momentum fades out of that move. So let's get on with what exactly happens. Right, just here, you're waiting for the data to hit. You do not want to preempt the data and get into the trade, but the goal is to get up towards 66. Market jumps on the data, nice swift move, just what you want to see. So we've now seen there is a willingness to buy here, right? You can see that on the footprint as well. You've got a nice little bit of imbalance just down there. And very quickly, we got into 5 and then got a bid for another 5 on a quick pullback to around about that 62.5. From the ladder, you're also helped out massively here that there's a 250 lot bid. That's always useful to see because that 250 lot bid is now saying to you, you've got protection. You can place your stop below there, which incidentally is just below that imbalance that you can see as well. So come back, had to enter another 5 slightly higher because the market is not rolling back quite enough to get us filled. That's okay. So what we're seeing here then is the market now starting to consolidate. You can start to see volume being done in these rotations on the footprint and crucially below the level. If you want to learn more about footprint, learn more about the course, click on the link. We do a whole webinar where we discuss footprint. We discuss also a $900,000 trade. But what we are seeing here is a market that's becoming rotational. But what this is showing you is there's a willingness to trade up at these prices. Crucially now, what we want to see is rather than people selling it up at 66, which is what's caused the market to stall here previously, we want to see buying actually push through that. So on a ladder, what you're looking to see is the offers that appear around 66. When the market trades up, they get hit, and they do not reappear. If they reappear, then again, this is showing people are willing to keep selling, absorb up at these points. You want to see them get pushed out the way essentially, and that's then going to give you confidence to play for the next leg of the move higher. So little bit of wait and see just at this point in time, but size has increased, so we're looking good. We're looking for the next part of this move. We're up to around about 20 contracts now. This is the point where you're waiting. This is the build up of energy essentially. That's the way you should see volume like this. Now we get a little bit of pace. So now you're going to be eyes on the ladder. This is your chance to then add to the position again. So we're waiting, you're looking for that add on. Trade 66, you notice how it moves straight through the offer at 66 and 66.25, now trading halves. This is where you're thinking, yep, add on to this. And there you see it, another add. So another 5 lots gets added into the position. We're above the record high. Wonderful. Now you're looking for some pace. Pace is what's going to help you in this, and that's what's going to show there is willingness of buyers. When I say pace, I want to see prices trade quickly across multiple prices. You see it there, 67s, 8, 9, 70, 71. Trade lots and lots very quick, and you see that on the footprint as well. There's your imbalance. This is a great point then to at least scale something down. Take a bit of profit when you see that pace coming into the market. And that's what I'd be looking to try and do there. Reduce the position down. This is what we were kind of talking through in the moment where we're doing it on the 6-week calls. Like, what are you going to do in this situation? What are you trying to get out of the trade? Those quick moments of momentum are chances to scale down, to bank something. If you're now wondering about a stop, you've got 2 choices. One, you can be really tight on this and say, well, we're starting to form a range. You can see once again, similar to what we did at lower down at around 63 to 65, we're now starting to accumulate volume up here. So you can place your stop below there, just below 69, and say, yep, that's good enough for me. It's a nice tight stop. It's going to bank some winnings. Alternatively, you could keep your stop down below that record high and play for a larger move. This is a choice that you have to make now so that you can hold on to this if indeed you want to, or get out without worrying about it continuing. So at this point in time, covered a little bit of the position, but also now looking to buy again at 69.5. Reason being, this is the low of this recent accumulation range. So I'm looking at this thinking, well, I've got a low volume below. Wonderful, that's supportive of a move higher. I can leave my bid here at 69.5 to try and add more on for the next leg towards the upside. Eyes on as well, larger orders at 75 and 76. These can become reasonable targets on a continued upside. Remember, we never traded these prices before, so there are no levels. What you see right now are the first time, or is the first time, that these prices trade. So as the market goes higher, you're looking at some kind of reference that can help you decide whether you should still be in this trade or not. There we go, we've moved through the high once more, and you're looking to use that large order, front run that, cover part of the position. So 5 lots has gone now, reduce the position a little bit further. What is interesting about this move compared to the other two, and this is something I'm always looking for on a short time frame move. This last break of high was a little bit slower. It took a lot more effort. You can see that in the progressive winding up of delta and the continued increase as people keep on pushing and pushing and pushing the highs. They're not driving the market through the high. What they're doing instead is just pushing, and they keep having to buy more, but they're buying into people getting in the way essentially. So what you see up here is people continuing to sell. So there's another offer of 5 to try and reduce position down further. And also you see the mouse hovering over the ladder to sell more. This is in order to reduce the position further. The idea of this being that, well, we're actually starting to see the market struggling to push through highs in the same way that it was. This is your reason to exit position, at least in the short term. Longer term moves are going to require some pullback. We've only been in this for around about 5 minutes. So it's a decent move, but if this is going to do more, it will naturally pull back first. So this is your chance to kind of get out of as much as possible. You see another 5 lots just comes out there as well, really winding the position down at this point in time. Position wound down. You've also seen delta here has flipped over. First time that we've seen a sort of meaningful amount of selling. 481 of negative delta versus 200 previously is quite significant. So we can do another video just purely looking at the impact of delta in future, but for this one, that flip over of delta is a sure sign that we're going to see at least some kind of short-term drop. This then is where you reduce down. It doesn't mean that 69s aren't still a good buy. So that order can be left there if you're looking to then buy for a further move higher, a break of the high just established, then this could still be a good place to buy. But crucially, you've already banked a fair bit of profit on the way up, meaning that if you do buy here and it falls, you're not going to be losing a great deal because you banked 15-20 lots all up at 75. So there we have it. That was the trade that we took during the 6-week course. As I said, click on the link if you want to see more, but this is a breakout using data to get through a previous record high in the S&P. I'll leave you there, guys. Have a good day.